Hey guys, if you've been following the markets at all, you've probably noticed that over the past few weeks, they've actually been increasing in prices and you've probably had positive returns. But if you take a look today or possibly further, which today is Tuesday, April 28th, 2020, you might notice that the markets are down slightly from where they've been, and there's a lot of sentiment out there in the public that we're gonna face a larger crash. So a lot of people out there are wondering, have we already hit a market bottom? Will there be a farther decline? And when will sports be back? I'm sorry, that comment was kind of personal. I'm just struggling over here, and I guess you could say that comment was a little out of left field. Thank you. Yep, yeah, okay. No, but in all seriousness, guys, I do hope to give you some information on the status of the market and hopefully leave you with a little more knowledge than you came in with. So without further ado, let's get right into the video and let's get started. I want to be completely transparent with you guys, and the fact of the matter is that if I'm being honest, I have to tell you, I don't know exactly what's going to happen. I don't know how low the market will get. I don't know if we'll continue going up with it. And to be honest, if there's any gurus or finance professionals or anyone online that's telling you they know exactly what will happen, unfortunately, I do think they're being a little dishonest with you, or maybe the better word is overconfident. The fact of the matter is there's so many different variables involved with a market recession, and the government also has many different ways that they can intervene. So with this said, it is almost impossible to predict exactly what's going to happen with the market, and I think that you should keep this in mind with any research you do. With this said, I'm going to offer you guys some reasons that the market could downturn further, or in my opinion likely will, but also some reasons that it might not in the case that it continues to rise in prices. So for starting to look at reasons that the market might decline further, I want to start by taking a look at this graph that I found, which basically shows the stages in a bubble. And it might be a pessimistic graph, but it does have some applicable points that I think we should take a look at. Many economists, but particularly John Hussman, believe that right now we are in the return to normal phase. You see that as an economy grows, you have the enthusiasm and greed of the public and you reach a new high. But unfortunately, we've already, according to this graph, we've already seen the slight decline in the denial with the bull trap. But John Hussman believes that we are in the return to normal phase, which will only be followed by a much larger and much more significant economic downturn. Now, although this could be the case in the following weeks, it's unknown, and there are a few reasons that this could happen. Okay, well, a few of these reasons. For one, we're facing some unprecedented unemployment rates, right? So 26 million Americans at this time that I'm seeing have been reported unemployed, but realistically, the number is probably higher at this point, at least 30 million or possibly higher than this. Many economists at this point even predict that the unemployment rate is around 15 to 25%, which is unprecedented numbers that we haven't seen since around the Great Depression, about a century ago. Since we're dealing with such an unknown virus, it might take longer to reopen America, but other countries as well. It might take longer to reopen these countries than we are expecting and or hoping for. There's a lot of speculation whether Americans will go out and spend their money even if America does successfully reopen. So there's a lot of factors to look at here and a lot of ways that we could stumble in the process of reinvigorating our economy. I guess the way I see it is that the longer it takes us to reopen the economy, the more chance that we have for economic downturn. Now, there's a lot of different obstacles that we could face in this process that I've mentioned and even ones that I haven't. So if we struggle and if Americans struggle to reopen their pockets to the economy, I think that we have an increasing chance of struggling in the coming weeks. I think it's also super critical to mention that many large companies in America are reporting their earnings for this quarter this coming week in the next few days. So really keep an eye out for it. Some of these companies are Apple, Microsoft, Facebook, Google, Amazon. These are all super large companies that make up about 24% of our S&P 500. And if these companies report very high earnings, which some of them could, this could help influence and raise our economy. While if they report a lot of struggling earnings, which could also happen, this could hurt our economy significantly. The same way that it's important to diversify a portfolio for investments, you also want to do that with an S&P 500. And unfortunately, over the years, America has moved in the direction of having a few very large tech companies, like I said, that make up about a quarter of our economy. So with this in mind, they play a very large role in what is going to happen in the coming weeks. And I think you guys should definitely stay up to date with their earnings, because that could probably influence stock prices significantly. Now, I know this is all pretty grim data, but there are also some reasons that we could see economic rise in the coming weeks, and that we might have already seen a market bottom. For one, and most importantly, changes in economic data or business earnings don't always reflect themselves immediately into the stock market. Now, public perception plays a very large role, and if people perceive the market as a good place to invest right now, whether it's because America is reopening or there might be a cure coming, or any of these cases could be a factor. But if America has a positive perception of the market, we could see rallies in the actual numbers that we're seeing, and you could see returns in investment as well. Now, the government also plays a large role, and I think in the past few weeks and also currently, they're showing that they are willing to intervene a significant amount to keep the market afloat. Now, the Federal Reserve has recently and also has cut interest rates, which is hopefully in efforts to re-stimulate the economy. People don't want to put their money into savings if they aren't receiving any interest, so hopefully they put them into investments or some other place that can grow. And this should help to re-stimulate the economy. So this is one thing they can do. Also, if you haven't noticed, the government is introducing a lot of stimulus bills. A lot of Americans have already received one. I do think that another one will be passed. I don't think that it's exactly that $2,000 for 12 months for Americans that a lot of YouTubers and a lot of people are talking about currently, but another stimulus will probably be introduced. All these things are an effort to help American people and hopefully stop the stock market from completely crashing. Now, I do believe that no money is free money, and if all Americans are receiving large amounts of cash, it'll be nice for the pockets, but not nice for inflation. And unfortunately, even if America is going into debt with these payments, I do think that you can have a devaluing of the dollar that is less buying power for you. So basically, to summarize all this, I have a strong belief that the government that we have right now, that consists mainly of baby boomers, is valuing the market considerably. They don't want a crash right before a lot of baby boomers are retiring, and I think they're going to put in a lot of effort to not have that happen. With this said, there's also safeguards that the market takes in terms of steep economic decline. So these are basically called trading curbs or circuit breakers. And what happens is if in a single day the market declines 7%, all buying and selling is halted for, I believe, an hour. Then again, if the market declines to 13% decline, and again a level 3 stoppage if it declines past 20%. Now, if you've taken a look at the market in the last couple weeks, this actually took place a few weeks ago when we had one of our worst days in the stock market. And this is a preventative measure to hopefully reduce the decline of a market on these strict selling days. And it is effective to a certain extent. Listen, like I said before, there's so many variables in play in a recession that it is virtually impossible to accurately forecast what's going to happen in the coming weeks. So keep this in mind and do as much research as you can. If you are wondering what I think, I do believe that it's a little unrealistic to think the market's just going to go up from this point. It seems like there's a lot of things that are coming out and a lot of data and a lot of information that's coming out that leads me to believe that we will see an economic downturn in the couple weeks. I'm not sure to what extent or how long, though. If I'm being completely honest, I'm not sure about that. So do your own research. Also, something that I think is valuable is a couple weeks ago when we saw our decline in market prices, I did buy in significantly, and I've benefited from that since then. Now, I don't know how much this is going to decline in the coming future, but that's a good tip. If you think that the markets are extremely declining, rather than shying away from the markets entirely, if you do have the investment money to use, think about investing during downturns, as this money does grow eventually when the market recovers, or at least it should theoretically, and it has in the past. With this said, guys, I hope you did enjoy the video. If you want some free money or free stocks, make sure to check out the WeBull link below. This will allow you to get 2 free stocks when you deposit $100 into your account, with one of these stocks being valued up to $1,400. Completely free money. It's worth it. Also, make sure to leave a like and subscribe, and I will see you guys next time. Happy investing and stay safe.